Stock markets recover in the last hour to end in the green after a volatile session. The Sensex gains over 150 points. Nifty gains nearly 50 points. The mid-cap index still ends in the red. Adani Group stocks rout extends for the third session, wiping out more than 5.6 lakh crore rupees in market cap. Those stocks come off their intraday lows. Adani accuses Hindenburg of securities fraud, calling the company the Madoffs of Manhattan. Hindenburg hits back, saying fraud cannot be obfuscated by nationalism.
We are supremely confident that from an institutional perspective, we are there, but there will be some pullback in the retail.
The CFO of the Adani Group remains confident that their 20,000 crore rupee follow-on public offer will go through despite the turbulence. Also says the group's total debt is $30 billion, out of which $9 billion is owed to Indian banks. The government holds an all-party meeting on the eve of the budget session of Parliament. The economic survey to be presented tomorrow, the budget on the 1st of February. India's top CEOs expect the thrust on infra development to continue in the union budget. That's as per the CNBC-TV18 FICCI Dhruva budget poll. A majority of CEOs seek rationalization of income tax slabs and demand minimum tax compliances. Most CEOs feel that India is better placed to face an impending global recession. The verdict, however, still split on the demand outlook for the next fiscal. Auto giants Renault and Nissan restructured their decade-long alliance. The new arrangement will see Renault's shareholding in Nissan reduced from 43% to 15%. And it's curtains down on the Congress Bharat Jodo Yatra in Srinagar after a distance of over 4,000 kilometers across 12 states, 2 union territories in close to 5 months. Congress President Kharge, flanked by Rahul Gandhi, Priyanka Gandhi and other senior leaders, hoisted tricolour outside the party headquarters. Hello and welcome to CNBC-TV18. You're watching the CEO budget poll. I'm Shireen Bhan. The continuation of the infra thrust, a boost to the manufacturing ecosystem and minimizing tax compliances. CNBC-TV18 in partnership with Dhruva Advisors and FICCI polled over 100 CEOs ahead of the Feb 1st union budget to get a pulse check on what India Inc. wants and hopes for. Let me quickly take you through some of the key findings of the CNBC-TV18 FICCI Dhruva CEO budget poll. Most CEOs expect India's growth story to remain relatively strong and see only a moderate impact of an impending global recession. When asked about what should be the overarching macroeconomic theme this budget, infra spending topped the list. Manufacturing boost and consumption demand. Close to half of the respondents feel the ease of doing business reforms would help boost the manufacturing ecosystem. CEOs hope for capacity utilization to touch between 50 to 80% in the next 2 quarters. The verdict on demand outlook, however, is split. Well, to take us through the findings and the mood ahead of the budget, I'm now joined by Subhrakant Panda, the president of FICCI and the MD of Indian Metals and Ferroalloys. Also with us, Anish Shah, senior FICCI vice president and the MD and CEO of the Mahindra Group. Sanjiv Mehta, the immediate past president of FICCI, the MD and CEO of Hindustan Unilever. And also with us on the show, Dinesh Kanabar, the CEO of Dhruva Advisors. Gentlemen, appreciate you joining us here on the program. Mr. Kanabar, to you first, because we've been doing this survey annually for many budgets now. So I want to understand from you, how different is this survey this time around in terms of the response that you're getting in? Over 2,000 people were sent out the questionnaire. Over 110 CEOs have been polled by us. Take us through what you make is the big difference this time around.
I have never, if I may dare say so, seen such a level of optimism, overall optimism, as I'm seeing in this particular survey. So if you come back and say that 72% of those polled believe that India is heading for good times, and they recognize that while India is not totally decoupled from the global recession, they believe that India is a very, very bright spot. Many of these findings, so to say, consistent with what you heard, Shireen, while you were in Davos speaking to a number of people. Manufacturing is at the core, and 92% of the people polled came back to say this is overwhelming preponderance of majority saying that India should focus on supply chain, thrust on manufacturing, 92% sort of going there. You mentioned earlier, Shirin, people talking about infrastructure spending. Very interestingly, only about 45% people felt that fiscal deficit was important. It's not that they are saying fiscal deficit should be thrown out of the window, but they are saying what's more important is government spend both on infra and on manufacturing capabilities. Not surprisingly, Shireen, ease of doing business continues to be at the top. And there is a huge request to the government to do everything and more to sort of implement ease of doing. There is a recognition that indeed government has done quite a bit, but really they believe that there's a lot more required to be done. One other issue where there is an absolute
isn't that...
split verdict.
Yeah. Yeah, as far as the demand outlook is concerned, and I'll come to that, Mr. Kanabar, in just a second, but, you're right in pointing out that isn't it always the case ahead of the budget that there is a long wish list of things that industry wants the government to do, so the work is never quite done. But let me, focus on the two or three highlights that you brought to the table. And Sanjiv Mehta, I'll start by asking you, this focus on manufacturing, and if you go over the survey, the overarching theme seems to be corporate India's belief that the government will go all out to try and boost manufacturing further to make good on the current opportunity as people are looking at China +1 or India ++, call it what you like. But what more do you believe the government can do? We've already seen the concessional tax rate for new manufacturing facilities. That was announced a few budgets ago. They could tweak as far as the customs duties are concerned to try and safeguard domestic interests. PLI schemes have already been announced across 13 different sectors. Perhaps a few more could be added. What really do you expect from a manufacturing perspective that could further accelerate growth?
Thank you, Shireen, for that question. You're absolutely right. A lot has been done. And we should also not forget that the government has brought down the corporate taxes over the last couple of years, which also augurs so well for the industry. There's one particular thing which the government can certainly double down on manufacturing, is looking at the concessional rate for new units, manufacturing units. The sunset period ends at about March of 24. And this is a great moment for the country to accelerate the share of manufacturing as a percentage of GDP, is to bring the foreign supply chains to Indian shores. And this perhaps concessional rate of tax, it would be good if the government could extend it by another 5 years. Another 5 years and not 1 year is because always a long-term policy gives a bit of certainty. And when investors look at it, this would be another area which could become a clinching point as they look at various alternatives to the existing manufacturing base. So this one is important. The other important bit to give a fillip to the economy in the country is the government, I think, over the last couple of years has done a great job when it comes to public capex. And while we may not expect the same percentage increase, I would certainly like to believe that the absolute amount should go up, maybe not by 33, 35%, which went up in the last budget, but a good, healthy increase would also augur very well for the country. Because, we also have to understand that we have to bring in competitiveness to manufacturing. For instance, logistics, the cost in India is 400, 500 bits higher than a peer group. So when you build the infrastructure, this would also help in reducing the cost of logistics, which would make the industry much more competitive. And last but not the least is R&D. We have to go up the value chain when it comes to innovation. I fully accept that the onus is a lot on the private sector to go up the value chain, but giving a fillip to R&D expenditure would also, I believe, be a right thing to take the R&D expense and the innovation in the country to an inflection point. So we could be looking at how do you incentivize more R&D spending in the country.
There was an economic survey done by the former economic CEA, KV Subramaniam, in which he had argued against the industry's demand for more SOPs on R&D expenditure. I don't know if there's going to be a shift in thinking within the government on that front. And even as far as the concessional rate of tax of 15% being continued for another 5 years, I know that that is a FICCI recommendation. The former Revenue Secretary, in fact, the immediate former Revenue Secretary, Tarun Bajaj, said if industry gives us commitments, then perhaps the government could look at that. So let's see what happens on each of those fronts. But Anish Shah, I want to come to you now and stick with the manufacturing aspect on what more you believe that the government can do. And specifically in areas like electric mobility, etc., what's the expectation that industry has? Are you really expecting realistically anything more, or are you hoping that at least what has been done should continue because the sun is setting on some of those schemes as well?
Shireen, I'd like to first reiterate that a lot has been done already. As we look at the tax structure, PLI schemes, policies like the National Logistics Policy, these are all steps in the right direction. I think the key thrust now is changing our mindset from actions to drive manufacturing in India to actions to make India the manufacturing hub for the world. And I think that will drive a series of actions which is around R&D, as Sanjiv talked about, around making business easier, partnering between the states and the center, because there are still a number of different steps and hurdles that companies have to go through, bringing down the cost of logistics. These are various things that we've got to do, and the private sector has a role to play in that as well. So I would say that steps have been taken. The private sector has to step up now and work closely with the government and really make India the destination for the future for manufacturing.
You know, you said the private sector has to step up, and that has been the ask of the government as well. The finance minister has been urging corporate India to step up. But if I look at what the survey is telling us, and that was the point that Mr. Kanabar was making as well, if you look at capacity utilization and what CEOs seem to be suggesting, it still seems like private capex is not going to be a secular way forward as far as industry is concerned. Perhaps in some sectors we will see the need for fresh capacity, but across the board that doesn't seem to be the trend. Anish Shah?
On that, Shireen, what the survey says is that 26% are close to peak capacity utilization rate, and another 34% are 70 to 80%. So we've really got 60% of manufacturing in India that's over 70% capacity. And even if we take a quarter that's close to capacity, as we are, is in both auto and tractor, we're looking to put in more. And going back to your earlier question on EV, I think a lot has been done. It's really up to the private sector now to take that step forward, to be able to come up with products that are best in class in the world, take advantage of what's out there. And yes, there is a little more, but I don't think we can step back and say that the government has to do everything. I think the onus is on us as a private sector.
Well, you know, that certainly will be music to the ears of the government, that industry is saying the government has done its bit and now it is up to the industry to take the baton forward. But Subhrakant Panda, this is also the last full budget before the 2024 general elections, and the buzz on the street is that perhaps this could be the budget that finally delivers as far as the middle class aspiration is concerned. You know, the feeling even within the BJP spokespeople, the party spokespeople speaking to us on the channel seem to suggest that this is the budget that the finance minister should use to deliver the goods for the middle class as well. What's the expectation on that front? And do you believe that that could provide some consumption fillip, some consumption boost as well? Do you realistically expect any kind of tax relief for the middle class?
That's an excellent question, Shireen. You know, budget is all about a wish list of expectations, as you correctly said. And, you know, the government really has to walk a tightrope in terms of balancing all the different needs and expectations. And I mean, the good thing is that we are in a position at the moment where there has been revenue buoyancy, which gives the finance minister the wriggle room that is perhaps necessary to look at some of these expectations seriously and deliver a mix and match in terms of. I mean, if you look at the list of expectations, starting with the fact that government capex needs to continue, they've done the heavy lifting during the pandemic and its immediate aftermath, and until private sector capex really kicks in full flow, which I think there are early signs of that, we do expect them to do that. I mean, it has to be a growth-oriented budget. So at some point, in a manner of speaking, they have to look at providing some boost to consumption. So it's an unenviable job to balance all these expectations and walk a fine line. But I do believe that there is certainly some scope to provide a little bit of relief, especially to the middle class, and provide provide that little boost to consumption. Again, as I said, I think India is well placed. But having said that, given the current outlook globally, where 1/3 of the world's economy is staring at recession, inflation continues to be a challenge globally. India has, Indian retail inflation is now within the central bank's band of 4% plus minus 2. But it's not something that we can absolutely preemptively declare victory on that. So it's a question of balancing all these various expectations. But I do believe that given the situation where we are in terms of being well positioned as well as we have ever been to face a potential crisis and the revenue buoyancy, etc., I do believe that there will be some boost to consumption through perhaps a rejigging of the tax rates, or making the new tax regime a little bit more attractive for for individuals to switch over, which has largely happened with corporates. But to the best of my knowledge, individuals tend to stick to the older tax regime with the myriad exemptions, etc. So that will serve a dual purpose of cleansing it up a little bit and by providing a fillip as well.
No, you're absolutely right. In fact, that has been acknowledged by the government, that they will need to do something to ensure that people switch to the new tax regime. And what those sweeteners can be, we don't know. But Mr. Kanabar, let's address that issue, both as far as personal income tax is concerned as well as corporate tax. To the point that Subhrakant made, that we have seen revenue buoyancy and this is going to be the last full budget, though the government has maintained that they intend to stick with the fiscal glide path, but maybe there could be a little slippage, we don't know. But what's the expectation, both on the personal tax front as well as the corporate tax change? Do you anticipate the much talked about capital gains rationalization to take place this time around?
So, two things. I think insofar as corporate tax is concerned, really we are really competitive globally. I don't think there is really much to do, save and except this point which Anish made earlier, which is a very strong recommendation and which I fully endorse from FICCI to the government, that the new manufacturing tax regime should be there for the next 5 years. On capital gains, Shirin, you and I spoke earlier, and as you will appreciate, much as people want simplicity, not multiple holding period, multiple rate, etc., if that means that increasing the holding period from 12 months to 18 months to 24 months, nobody wants that. And the impact of that on the stock market could be remaining to be seen. So I don't think, while people on the one hand profess simplicity, they don't want simplicity at the cost of having to pay a lot more taxes. On the individual tax side, however, Shirin, a lot remains to be done. To my mind, that the inflation and everything that goes with it, there is a need to relook at the threshold level. I am aware of government's own reluctance to increase the threshold limit because then people don't file returns and they can't be tracked, but there is a need to relook at it. There is a need to relook at the middle rate so that there is a lot more money which can be left in the middle class. And as to the point which you made, that is one area where the CEO survey shows that there is sort of an optimism with 40-odd% saying demand is picking up, others saying no, it is not picking up. So that's something which you need to see. And finally, the cause of those who are high taxpayers seem to be always put under the carpet. And I do think there is a need to relook at the surcharges which have been imposed. Surcharges can't be for perennial times to come. The highest maximum marginal tax rate of 42% is indeed something which needs a serious relook. So if the government has to relook, really it is more at individual taxes rather than at corporate taxes.
Yeah, I would imagine that to be the case. And you're absolutely right. The feedback that we got as well on capital gains was that nobody wants to spoil the party at this point in time. But, we will have to wait to see what is revealed on the 1st of February. But Sanjiv Mehta, on the demand issue, and let me come back to you on that front. What is it looking like at this point in time? Some CEOs that we speak to say that there is a semblance of a recovery as far as the rural economy is concerned, rural demand is concerned. What is your own expectation? And really on the back of that, what kind of drivers do you believe the government can deliver to try and provide a fillip, especially when we talk about rural consumption and rural demand?
Sure, Shirin. First, I think we have to accept that we will need a global trigger for the inflation and commodity prices to start moving in the other direction, that is, start deflating. And the best trigger could be if there's a resolution of the crisis in Ukraine and Russia. The second is there would be a stress on balance of payments, and the interest rates are bound to remain at a high level. And they're not going to go down, certainly not to the earlier era. And even if the increase slows down, they will still remain at a high level. And in this context, if you look at India, the good bit is that while the volume growth, say in FMCG, you were talking about rural, is still negative, but the headline growth, which is the value growth, is still positive. That augurs very well. Positive value growth indicates that the consumers are spending more money. But when you look at the volume growth being negative, it means that there is a stress on the wallet and they are titrating the volumes. Now, different consumption of different items are going to be impacted by different macro and microeconomic indicators. See, on a general basis, in an industry like FMCG, you require more money in the hands of more people. Very simple. So the first and most important bit for the growth, for the budget has to be a growth-oriented budget. Yeah, the government's twin objective of ensuring that the growth remains at a high level and containing inflation, and the way they managed it in this fiscal, that is something which has to continue in the future. The other bit is directionally, there should be a fiscal consolidation. Yeah. Is we were at about 6.4%. I think that's where the number would come out. We may not go down steeply, but directionally it would be good, because that would ensure that our cost of borrowing remains at an acceptable level when we borrow outside, and also the rating of the country remains at a pretty good level. So there are different levers to be played. Not very easy for the budget for Madam Sitaraman to balance the different objectives, but looking at her track record, she's done an amazing job in the last couple of years. And I remain very confident that she's going to steer the country again on a path of ensuring that the growth remains buoyant and the inflation is contained.
Yes, I think that is the expectation, that this should be a growth-oriented budget. And, point well taken there as far as the fisc is concerned. The interest costs for the government are a challenge as well, and something that they need to be mindful of, certainly in an era of high interest rates. Anish Shah, on demand, FMCG still muted, auto has recovered. So what's the expectation here on as far as demand is concerned? And, if you had one single wish for budget 2023, what would it be?
So, Shireen, demand for us actually has been outstanding because of our product launches on the auto side. And we've got a huge backlog, in fact. So we are very well positioned from that perspective. On the farm side, we've seen the market actually grow fairly significantly this year over a strong base. And the demand continues to be strong today on the farm side. So we're not seeing really any impact of higher interest rates there as yet. As we look at other sectors as well, we are seeing fairly robust demand all through. There are certain pockets where we're seeing weaknesses in some areas where the consumer is getting a little impacted by high rates, but that's only in very small pockets right now. On balance, it's very strong. In terms of what we'd like to see, I would actually put 4 areas as key for the budget. One is fiscal discipline. You've got to be on a path of getting less than 6%. Second is focus on public infrastructure and capex. Third is boost manufacturing and exports, and their ease of doing business is a key part of that. And fourth, we have to focus on inclusive growth for everyone. Prioritize social spending with rural, health, and education, and that's really going to help drive inclusive growth.
Subhrakant, we've spent most part of this program talking about what the government can do through this budget, but let's also talk about what the industry intends to focus on, and that's interesting what the survey suggests. Digitalization right up there, 70% saying that that is going to be part of the core strategy over the next 2 to 3 years. Capacity expansion, 46% believe that that is going to be something that they will look at. 44% manpower retention and capital structure optimization, about 41% 21%. But digitalization, that seems to be the key theme playing across corporate India, Subhrakant.
Oh, absolutely. And, that is digitalization is something where India has done absolutely brilliantly. Be it, when you talk about in the fintech space, you talk about UPI, and that's, of course, the go-to example of everybody when it comes to digitalization. But I think there is a lot more which has happened under the hood, so to say, when it comes to this critical area. And don't forget, it's, digitalization is something which helps companies leapfrog in terms of achieving efficiencies, etc. It's something that can help you in terms of your target market, because if you look at the infrastructure space, for example, a simple thing like access to the FASTag data, etc., is something that can have tremendous impact in terms of their planning, in terms of the impact they have, in terms of various other things. Clearly, again, data in its form being made available to the financial sector helps in terms of lending. So digitalization is a tremendous success story in India, and this is something I'm not at all surprised to see that being a key priority for the respondents of this poll, because that is where I think a lot can be achieved. And it's not just the big boys. I think if you look at the MSME sector, etc. Going ahead, this is one route to help with their compliances with now even the central government coming in with the national single window to augment that of various states, or practically all the states have single window systems. So I'm not at all surprised to see this, and this is something which will add to the India growth story in no mean measure.
Gentlemen, I'm going to end by asking you a question that we didn't ask as part of the poll. So I'm throwing a curveball your way. Dinesh Kanabar, I'll start with you. 2 hours, 42 minutes. That was the last record for Nirmala Sitharaman's speech. Do you believe that she's going to break that this time around?
I think over a period of time, we have all seen Finance Minister mature, emerge as a great leader. And I think what she will lay down in this budget is how she does see the next 5 years, assuming that the government was to get re-elected. What is the roadmap for the budgets going forward? I think that's what she mentioned at the FICCI AGM, and that's what she's going to do.
Sanjiv Mehta, 2 hours, 42 minutes or more?
Don't measure the quality of budget with the quantity of budget speech. Substance over quantity.
Substance over quantity. Anish Shah, Subhrakant Panda, Sanjiv Mehta and Dinesh Kanabar, many thanks for joining us here on the CNBC-TV18 FICCI Dhruva Advisors CEO budget poll. This is, of course, our annual exercise. All will be revealed on the 1st of February when the Finance Minister delivers the union budget. How much of what industry has put down as part of its wish list will be translated into reality? Catch the fine print live here on CNBC-TV18, your budget headquarters, as we analyze the union budget for you. Till then, from all of us here on the team, goodbye. Many thanks for watching.